Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 314th edition of Investdata Trading Academy Live with Ambrose. Yes, I will tell you that global market as we speak have opened, in a conscious mode. I can say that most of the market across the globe have edged, towards southward movement this morning, as as investors or market players are applying caution as they interpret different, macroeconomic data as emanating from different domains, from China, from Europe, from US, all this even from Asia. All these are what is influencing the market. Africa is not left behind. The same trend is what we are seeing right away. I will tell you that this morning we're seeing a different data from even from UK. All this data is what is influencing activity. Just as here in Nigeria, down here in Nigeria, all eyes are what on July inflation data today. And I believe all this what investors are interpreting, also they are expecting, and this was going to drive their sentiment. And that is why you can see that in different markets in US, in Europe, in Asia, and Africa, market is also slowing down in the red. It was flat, some are flat and red, while some are having a mistrend. Looking at different indices they are using in that market to kind of capture different performance in their floor. But I tell you that as we speak now, the market across the globe is on really on a dicey position. When I mean that is that a lot of surveys that are coming, sentiment is also reacting in that direction. Psychology of investors are being moved up and down as we speak. These are the reasons why we are seeing that the market, both the eurozone, all of them are in this direction. And I will tell you that I will start from what is happening in the Asia market. The National Bureau of Statistics in China has just released data about concerning the job data or unemployment data. Yes, which they say for the younger people in China, the model they are using, they want to stop it, they want to improve on it. But if you look at the data, there is that as of June, that unemployment in China has hit about 21.5%, 21.3%, sorry, in the month of June. And you can see that already in May. And on that, the statistical body is saying that they want to kind of improve the methodology they use to collect data. For that, they want to improve on it, and that's why they are not releasing for this month of July. That's why we're seeing the June figure as we speak now. That means data is for that. Also in UK, or let me say UK now, also seeing that they also released their job data as we speak now, which also had climbed to 4.2 from the previous position of 4.4% in the month of May. You can see that this also has continued for almost 3 months that remain in that up direction. Now to hit 4.8, that means seeing that unemployment in that environment has also increased. Even when the economy just recently released the economic data to show that their economy, UK economy has grown for the period, but still this data is what is all driving. That's why they're having a positive data that the economy expanded. But now the figure are telling us that unemployment has also heightened in that environment by climbing from 4% to 4.2. You can see also it's not only in Europe, in UK, we're seeing different data emanating from different environment. And also we're also seeing that the central banks of this environment are also taking some decision. If you look at what happened in China, we saw that the central bank there has also cut rate by another 15 basic point from 2.65 to 2.50 as we speak now, not just to assist economic recovery. After seeing that most of the data from China are looking very gloomy, that means since even post COVID-19 restriction was removed, the economy has not really shown a strong power of recovery, and that the further cut rate. Don't forget that last time he did a 10 basic point in rate, now we're doing 15 basic point to also kind of assist the economy, just to help the economy to bounce back again. And that is for China as we speak. And also in that regard, all earnings that are also coming around that, we're seeing that earnings that are, like I say, is the rush hour for last earnings that are coming from different companies. These numbers are still missed. Like I said, their Bureau of Statistics or National Bureau of Statistics have got a release on data. This is also influencing them, and also knowing that the retail sales, survey that was not done in China also look a bit also made. We're seeing that the outlook of China is not looking too bright, and that's why the government is also taking steps to make sure that they cut interest rate, and at the same time they promise a stimulus package that they are yet to come. But I believe that people are now looking at the way the economy is going. They are seeing that immediate downward spread might also affect the global economy. But still, we're seeing that oil prices have stabilized at this point, despite what is happening in most of this matured economy. Oil price still remains strong, and as we speak now, oil is trading around the 86.31 no dollar per barrel. For me, it's still very, very okay. But for those that are producing economy, it will be a good news for them. But for those that also not producing, that's going to impact their cost of production, this will also be another kind of trigger for inflation again in the economy that is already slowing down globally. Things are not really showing direction where they are going. But as we speak, Asia stocks are still in a mixed direction. But the good news that Japan economy has expanded to come to back to life. I'll tell you, since post COVID 19 2020, we are seeing that this is the first time we are seeing an economic growth of about 6%. All the focus were around the 3.2 or 3.5. But now when the leaders Q2 GDP, I mean, shows that when others were using hacking rate, the same Japan were busy making sure that their rate is negative. You can see that it had pay out for them. That's why I said in any economy, look at what work for you. We don't need to just to follow the trend of other economy. We must look inward and see that Japan is another testimony that we must look at what the economy is known for and what they are doing and how they are supposed to drive them, not what Mr. Another country is doing or what they're doing. You can see that Japan was not doing the same rate hike that others were doing. You can see that their economy has bounced back fast, since post COVID 19 era, where we had a major slowdown in economy. This is the first economy that is bouncing out to almost to record 6%. And don't forget that this is the figure that we normally see in China. China has slowed down for that. As you can see, China is taking all these steps to kind of boost the economy or kind of trigger it again. That's why we're seeing all this. I think that policymakers in this economy, and even ours here now, to learn from all this that you must not pattern your policy in another person, with what another person do. Look at what works for you, and at the same time, tweak your economy to know that that trend you are bringing is also a good one. It is what I expect that we should do now as a nation. We are not copying poverty, what other economies are doing, but look inward and see where we have strength and what we can do to know that we put our economy in the right direction. I think that is what we should be preaching now most for our economic managers, as we're looking forward to see their list very soon from the presidency to know who will be who and who will be overseeing which sector or which ministry. These are the things that we expect that when it comes, going to also give another kind of a booster for the market as we all look forward to see these names also coming up in the economy. But I believe that we also traders that are invested in the market should not be carried away with the trend of the market. We know that yes, market is a bit dull down here, but in this mature market, we're also seeing that the trend there are also in almost the same trend we're seeing, a mixed trend up and down. But I tell you that when you see a stock gaining one day and losing one day, that has not formed a trend. We need to understand where the market is going. And that's why we're seeing consolidation in our own market here. The same trend also we're seeing in matured market. If you look at Europe now, Europe stocks are also looking down at this hour. All inch downward today. As the real estate the stocks we are also rising, and the rising bond yield are also putting pressure on the market in Europe. And don't forget that at the same time, of course, despite the positive figure I told you about UK performance, is not reflecting much on European market. As we speak now, those market there are still missed high. The bond yield also in US they are not left behind, and also the property price and all this. These are what is influencing the market. And with this data that come about unemployment rate also moving from 4.4% to 4.2% is not also a good news for that environment. I think these are what investors are also checking and looking at for at this moment as we speak. That's why I tell you that as an investor, you must know what is happening around you, and also so that you can take action and act with information. But if you look at what is happening in US right away, we're seeing also a mixed trend, but see we're seeing a market flattish nature, but also looking downward again at this hour. And don't forget that the all eyes are what on release of release of retail state data that will come from the Bureau of Statistics also to know exactly what has happened this period, and also to see whether there's improvement in this sector, because when the consumers has money to buy, that is where the producers also can also make sales. Want to look at what is the the retail sales price you're looking at, and also all eyes on what also on more retail company, retail stores, earnings. We're expecting to that the Walmart and others will be releasing the result today. But this hour, I'll tell you that one of the companies has announced, with the Q2 result, and also announcing a share buyback. The Home Depot, announced a share buyback. Even as it released a Q2 number. All these are what also influence. And also, Russia for the stock has also high rate again. These are what is shaping the market, both in US and other market across the globe. But I think that investors are also keeping to interpret all these figures and all this information to arrive at the conclusion. That's why we are seeing market also slowing down in across all these market this time, because we want to know where we are going. Already today is the immediate day for the third quarter. That means remaining no quarter, the remaining days in the quarter also is ahead. That means as we are seeing all this macroeconomic data, inflation, retail sale data, we're seeing adjustment in interest rate. Now all this just to shape psychology of investors and know how to position their portfolio. I told you about bond hitting the highest in UK Europe market, also in US not level. In US we're seeing that 10 years the treasury bills above above 4, almost 4.2, 4.23 as we speak. These are the things that's also shaping the whole market. I mentioned that the Japan economy sparked into life. Really know that because of what the first time we're seeing this domain, recording about the such a huge 6% growth in what in the second quarter. This is a big plus for them, and I believe it's the fastest expansion, like I said earlier, from 2020, and following what the reversal of the 3.7 was expected in what in January to what January. I can see it moved from 3.7 in January to that is first quarter to see. You can see how the expansion. You can see this is good, and I can tell you that this growth is so largely driven by the tourism and also the auto sales in the economy. You can see that where you have strength. I tell you that this is very very key. Now you can see that the tourism and the auto sale has supported the economy for the economy also on the back of these are the things and also on the back of weak currency. You can see even when you are devaluing your money, you are devaluing that to attract more sales. It's a different thing. You can see that in Japan, because of the value, you can see that activities also has improved. That's why we need to see now as a nation, especially Nigeria, to know what we are doing to attract fund and also make sure that we have either we have a advantage of skill of preference or skill of where we have a kind of an advantage to produce a lot less capitalize on it, and that will help us to show up our economic performance. We have seen what telecom has done to GDP. We need to do more other sector before we can see so that at the end of the day, Nigeria economy will start looking up. We can see that Japan has given us an insight to what we should expect. From an economy that has its own policy than running what another person is running. We need to learn from all this as a nation, especially in Nigeria at this critical time that we're having FS issue up and down here. We should know what we are in for and also handle it with care that it will not put the economy into another recession. We know we're not coming from recession if it's continuing like this. Seeing the manufacturing sector that really employ people is posting the red, and we don't know how long they put this red. This is possible that at the end of the day, these are those who are start laying off their staff because of policy of foreign exchange institution, which we all welcome. But I think implementation and readiness of the CBN is what we are seeing that is really affecting this the whole thing generally as we speak now. But for no cause for alarm, I think we should also keep our finger crossed and give the government a little time to see what they can do. I believe that when the government form a forum with the ministers coming, let's see the plan they will shoot to push out for to make sure that things come in shape and in order at the right time so that we know where we are heading to as a nation. This is very very critical at this point because we need to save Nigeria from going back from where we are coming from. Yes, come back to Africa. Africa market is missed, and as we speak now, NGS is also slightly in the red, extending the negative position of yesterday to this hour because of what profit taking and terms of people sitting on the fence to see what the inflation figure, consumer price index for the month of July will look like. Because I tell you, this one will be another trigger where fund will flow into. We saw when there was rate hike, we saw it immediately after rate hike of 15 basic points. We saw that the physical market, especially B, we saw an upward rate interest adjustment from almost 6 point something to 12.15. That automatically we saw fund leaving equity space to what to that instrument. But now that all eyes are on inflation will put most of those instruments in red, especially now that we're seeing a pullback in yield or in rate in that industry again back to below 10. If also we're seeing inflation rate today hitting around 35, 23 and above, that will threaten those investments, and that will more likely see what flow of fund again. And don't forget that all eyes are still on what on Q on Q half year result of the first year banks. And I tell you, as most traders will be trying to sell into recovery of the market, why design investors are taking opportunity to pile up some company that has good fundamentals ahead of their world, ahead of their third quarter result and also full year. Because as we speak now, we are seeing what is happening in the market. Design investor and those that are followers here on this channel or this platform, I've been telling you or I've been advising that since even December last Q4 2022, that is the time to start realigning your portfolio towards the service sector. We already seen that the more inflation go, the more we're seeing interest rates going to affect the risk sector. The risk sector in any economy, my friend sector, already seen that policy of inflation is affecting them already. High interest rates are affecting them already. For that, it will now represent to where you see that their earnings will remain, even when the market is still a bit shaky in terms of we're seeing one day up, one day down, profit taking. Doesn't that at the end of the market? The market still has potential to go higher, depending where you are seeing a better figure. As I speak now, I'll tell you that we have not seen this investor back to the market because the volume the market has speak now is declining on daily basis. Say that everybody is waiting to see where the market will go. And you don't forget that these investor are the one that provide more liquidity and they come in volume. I tell you, after they've done analysis on this half year result, you see they're going to follow in that direction. That will change the face of the market. But at this point, you as a trader investor, know that you are looking to the way where you see that there's opportunity for you to make money. When I mean that, look at those sectors and those individual companies that have all it takes to kind of strengthen their earnings power that will support their price and also high payment. Because as markets have rallied to this level, if companies dividend remain as it is the previous year, it might not impact more. That means it's a company that have done well or its earnings is looking up, are able to grow their payout, and also they will support the price at the end of the day. You must look at all this, even as the market is at this level. Don't need to panic, but if you are in profit, nothing stops you by taking your profit and what the trend of the market so that you can buy more to see confirm with that. But market is consolidating. I speak now. The way the market is going, the market has formed a consolidated level. Once you finish for that consolidation level, then you now find a breakout, either a breakout to the north or a breakout to the south. That is where you know exactly. At this point now, just watch and see where you can take profit and also where you can do accumulation when you have information at the time when you see that the company has it where it's going on terms of their Q1, Q2, and what you are seeing that policy in the environment right now was to favor them. Look at all this together holistically and know what to do as a market speak as to speak right away. Yes, coming back to the market, you look at the state of the market. Market is trading 64,913, 900 and 64,900 113.117. Market is down by 123.28. That means market is lately in the red by 0.18, which you can say 0.2 as we now. Market is still okay in order, but profit taking has good. But if you look at the market bread is already negative. Why I mean negative? The market bread is we're having more sellers. We have 18 sellers as we speak. Market have 18 losers and what and 11 gainers. You can see what I mean. We have 18 decliners and there's just 11 advancers in the market right away. And this already midday. You can see that between now and end of the day, we'll not know where the market will go. But I'll tell you, there's no cause for alarm. Always invest wisely and know when to cut out your profit. Also, when to jump into a new trade. It's very, very important. But if you look at the top gainers as we speak now in the market, we're seeing that Cornerstone has maintained that trend for almost like a fourth straight day now. Cornerstone is moving, is leading, followed by TIP, and also you can see the linkage assurance and the Capaton is there, and we're seeing as an NSL Tech. These are the five gainers. And when you see all these low cap stores leading in the market, and you can see that there's something, market is still dull. because we are seeing that not much is happening, volume is low, and it's also important that we can see that there's a kind of a divergence between other industries and what is happening in the insurance sector. Other industries have been looking down, while insurance sector have been looking up because there are some stuff in there that continue to want to look up. And don't forget that I said also in this class that the 200 basic, the 200,000, sorry, the 200% increase in their premium is playing out, because you can see that most of the numbers in the industry, what are people to say, are looking what are looking up. It's a good one for insurance company. But if you look at the losers as speak now, CWG, which is the computer warehouse group, also is leading, followed by um, Sunu Assurance, no profit taking activities, Homatech, then we can also see Cater Hotel and Unity Bank. These are the top users right away. But in terms of volume, I think that Transcorp has has sustained that lead in terms of volume. We saw it yesterday. At speak now, Transcorp is doing 30.31 million share traded so far, and UBA is following by 15.75. And we're seeing Stanbic IBTC powerfully up kind of volume coming up to the 7.3 million share traded so far, and the Cornerstone Insurance 7.0, that is 7 million share traded so far, and Access Corp is now below 17, around the 1690 now. We are seeing that the stock are traded was 6.1 million share at this hour. You can see that volume in the market is very, very small. Says that people are looking to see where the market is going to flow to, especially with all eyes on what on this first year bank result. These are what is the state of the market right away. Want to quickly go back to what to the market to see what the live chart is telling us. It's very, very important that we look at it together. You can see that the trend you are seeing here. After this double top here, market continue, and you can see the state the market has pulled back this morning, which you can see here, a bit down, back here. Market is down, like I told you now, 1, it is almost 0.2. That is what we are seeing at the state of the market right away. This is a good one. You can see that out there that is not totally bad, because market is still within the consolidation level of April 5C. Because I told you this in the last class. I know that we didn't hold class yesterday, but let me still come here and draw that line. This is the first one here. This is the strong line. Okay, let me test where this is the first line, the first strong resistance level that what market is looking at now. These are around the world, around 64, 65, 465, 380. This is the where market is, the level market is at this right now. On the market, we can be looking at this one. This is the where the market is. But on this direction, we can also say that market is consolidating at this level. You can see all this, green candlestick, red candlestick. This is the rate the market. The market has not come down below this. Once the breaker take away this candlestick, you can see here almost bullish engulfing. For it continue in that direction, but now start coming down. Let me also draw the support, another support level here, so you understand what I mean at this point. This is the position of the market. And I can see that in between this is where market is consolidating until breakout either up. Now you can see that it's pulling back within the within that consolidation range. That is where you can see the market is now. But another thing that if you look at market on its own has also formed what I call a descending triangle, that also in technical analysis is a chart pattern that tells that the market is likely to what to continue in this direction, or you expect to see what a pullback, either a breakout from this trend. Now you can see where the market is, where it is. Then for you to have the descending triangle, you can take from this point here. From here now you can just take, you can only draw. Also it's possible that you can take it from here to make it easy. Just watch. You can see that the trend is going this way, this way, this way. Okay. If you draw this line here, you can see that it has formed. It's what we call it's got on this a live chart. Try to draw that. I'm not getting it here, but this what we call descending triangle. You can see this is the base here. This another wave down here. You can call it a descending triangle, or you call it a flag. Anyone want to call it, I say that, and a flag say that it's a continuation of either a trend or a breakdown. a breakout is possible. But that's why I said these two lines here, so resistance up here and support up here, that is the the consolidation range of the market, and this for the market itself. Then quickly look at the let's look at the 1 hour to see what the market is doing on the 1 hour chart. On the 1 hour chart, you can see how the market look like. Sorry, let me quickly put the indicators that we need here. Let's call the indicators so that we can get full gist of what we are discussing on the chart. So this is a live market we're looking at. Let's quickly call the indicators here. MACD, for the MACD, call the money flow and what and T line. Yes. Good one. Fine. Better now. You can see that looking at the the 1 hour chart, and that is market is below the T line already, but within that consolidated level of within the resistance and the and the support level, and in between these two is what we call also value area in technical analysis. These are very key areas. Either it break down here or it break up. But now you can start it's trading below the T line. And if you look at your MACD on 1 hour chart, it's also giving sign of that market is becoming bearish. Look at where it's going. But money flow is looking up almost 64 on the 1 hour chart. But now look at what is the 15-minute chart saying on the market right away. 15 minutes I said that market is still very weak, looking waiting for a trigger. I can see that market have been trading below the C line all this while. You can see it here. And MACD has performed what a bearish trend, and money flow is really very low on 15 minutes chart. But if you check what is the market doing on the daily chart. On the daily chart, you can see that market continue to work. Money flow, because that fund is not entering the market as we speak. And you can see that on the daily chart, market is bearish already, which you can see that we are experiencing a still sentiment, selling sentiment all this while because of profit taking and all those stuff in the market. But I tell you that this inflation figure today and that of the appointment, physical area having the ministers to oversee the economy and also the national economic plan is very important. We need to see all this so that at the end of the day, investors will also know what to do. That's why when you attend this kind of class, you don't panic. Rather, you look at your portfolio and see how you can reduce your portfolio, trading towards where you see that there will be light at the end of the tunnel is very important. These are the funds leaving the market here. You can see the money flow pattern. Also, the market is bearish and speak, but there are some stuff that you're also going to watch at the end of the day. Yes, let's quickly look at those stocks that we should consider right away in the market, and let's see how they are doing so that you also know what to do with your position in this stock if you are there. Let's quickly look at those stocks that are gaining. Then we can look at what is happening in the life of know, Transcorp. I think that Transcorp has stand out all this while in the market in terms of resisting decline. How far will Transcorp go? Let's look at it. This is Transcorp. This is a daily chart of Transcorp. Whereas Transcorp is trading above the T line here, I can see that there's already a bullish trade that the stock is bullish. Look at MACD already, and money flow is above 60 on a day chart. For me, it's a good news for Transcorp. Want to look at 1 hour chart, but this is a day. This the day trade we are doing here or chart we are looking at, it's still above the T line on a 1 hour chart. Strong, but you can see that gradually I think that momentum is slowing down here. If you look at this histogram, you can see it's coming down gradually. Our money flow so that I've gone above 80, so gradually now start looking down small. No, don't forget that profit taking is necessary. Look at where the stock have moved to this level. It has created opportunity for investors to take profit. And not that taking does not mean that the stock is bad, but you say that there's still opportunity. If you will, looking at the results that came from Transcorp, there's still potential for Transcorp. Even when it starts coming down today, it's a opportunity for you to buy. But still, like I said, it's trading flat on the T line for now, gradually below it, so to speak. But on a 15-minute chart, remember, and you can see sign of profit taking already in the stock. Everyone has seen this red right away, and money flow is looking down around the 49 or 50. You can see it here on a 15-minute chart. Let me quickly check the 5-minute chart of the stock. What is it doing? 5 minutes chart, I confirm that the stock is trading above the T line. You can see here profit taking. For that 5 minutes chart also gives a sign that there are still some pockets of activity that people might like taking, trying to enter the stock. I see money flow entering, looking up gradually. And we're seeing also that the market is also trying to become bullish on the 15 minute chart. These are the things we look at to know. That's why they are profit taking. There are some also people buying into the stock right away as we speak. These are the things we look at. For me, Transcorp is a place where I hope to join Transcorp. Just hold your position. You don't need to panic out. And also look at what is happening in NACO before we look at the let's quickly look at what is happening in UBA first before we look at the NACO. UBA pulling back, is it creating an opportunity for us to make money? Let's see. This is a bank that all eyes are not expecting their work. They are after result, and we believe that these banks that are remaining, we're going to see impact of foreign exchange revaluation impacting their numbers too. I think it's a plus for them. But let's look at what UBA do. UBA on a 5 minute chart, for me, is still we're seeing volume here green. 5 minute chart is looking powerful for UBA. Tell you that for those in UBA, don't need to panic at all. That's why that the stock is still consider it's above it. Can see where it is now above the 5 minute chart. Strong volume here. Can see that we're seeing MACD looking good. And money flow also leading almost at 94. For me, it's a good one for UBA. Let's look at 15 minutes before we go to 1 hour. On 15 minute chart, we're seeing also MACD is becoming bullish. You can see that the acceleration is going up. That's why I said let's look at it. You can see also if this blue and plus red one, this is a good sign. And we're seeing money flow also looking up around 43 for 15 minute chart for UBA. That is very, very nice for me. It's a good chart pattern to watch. But if you look at the 1 hour chart, 1 hour chart, you can see that yes, it tried to resist the kind of decline, but we're seeing that it's trading below the T line on 1 hour chart. I traded around 1405 right away. And yesterday, it started I traded around 1430. You can see money flow is looking down seriously. You might see like is it profit taking? Let's see. Let's go to to this chart to see. On today's chart, it's just flat on the T line now. You can see that we're seeing UV is going down from almost 1450 back to around 1405 right away now. I can see also MACD is looking up, but not for that MACD is a lag indicator, but what is that? But yet to cross the red one, and the money flow has come low. Trying to look up. Some people say this at over sold region that might likely go up. Let's think that that will happen. But for me, there's a positive chart forward for UBA. We'll quickly look at what is happening in NACO assets. As we speak, this is a company we are seeing that the people that are in charge of decision making are taking position. What are they seeing that you and I that not there is seeing? It also is sign that something is about to happen. So that you know where to put your money. If you look at the chart for this, was that it's in above the T line. It can move almost like 8:30 this morning, 18:30, but now around back around 8:25. Not a bad one. We're seeing the MACD is coming point. You can see the MACD is accelerating up. You can see it here. Money flow is looking down gradually around 53. But I see the potential in this stock. Either in the technical is not looking badly. We expect that the strong fundamental for Q1, Q2, if that trend continues in Q3, this stock will start offers the potential to go. And don't forget that the payout ratio and the payout and the company performance to support that high payout they saw in 2022 is still there. And I believe that this also is part of what we expect to change, to change the whole story in NACO, and also seeing that the people that are management are also taking action. Not only that, you can see what happened in Sterling Bank, also what is happening in Custodian and other banks. We are seeing that people are accumulating, and these are people that are involved. You see, especially the MD of a company, CEO, CFO, executive directors buying something. But when you see non-executive chairman, it's also important. But those ones they might be doing other business. But when you see someone that is using his own earn salary now coming to buy the company, it says something. And this is what we also look at when we're looking at the price appreciation or where to invest. You want always look at the insider deal. It's part of your criteria to know what is happening. After looking at your fundamental, looking at your chart, if you have this formation of insider, look at the volume they are buying and also when the price they are buying it, if you have it. Some of them are buy a high price and still buying things that there's something they are seeing. On this note, we'll say we'll stop the class here and I look forward to see you tomorrow. But for those that are paying for the video, I believe that you are getting the video link on how to take advantage of the market, especially now that we're seeing that market is a bit dull. For you to have information and act quickly, you must know how to trade on your own, from your phone, from your laptop, anywhere in the world. And that is why you need to get the video, the latest video, to teach you and take you how to take advantage of what the market. Because that 10 video in that one, 10 video in one will tell you exactly what to do at this level, how to know exactly how to open your account online, how to trade online, what you look out for, because you need to look at all those things. Once you get it right, you are good to go. On this note, I say see you tomorrow. Bye.